Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, member of the board, and once a week, Monday, same time, same place, I want to talk to you on cycles, cycle analysis, and let's get some current data sets and analyze how the dominant cycles look like in these data sets. So, what do we have for today? Today I have two topics which I like to share with you. The first one is I will take the weekly analysis I did last week on the S&P 500 and just show you a different way how to visualize or to analyze the composite cycle in a way how I often present charts afterwards. So that's topic number one. And topic number two, thanks for participating in the poll. So I want to show you the results based on your answers you have given to us as a feedback, how we can improve this Cycles TV. So these are the two topics for today. Just upfront, this session is pre-recorded as I'm on business travel tomorrow. Therefore, I took the time now on Sunday to just do a quick recording to keep the flow on Monday. Thanks for joining. Okay, topic number one, I think for the next 5 to 10 minutes, weekly S&P 500. You might remember, not this chart here, but you might remember in last week, I showed you the weekly cycles on the S&P, which we will see here right in the chart. So this is a weekly S&P 500. I will just do a quick recap here because the shorter term cycles have not been so successful in this data set because we have a just straight uptrend, but please review the session from last week for more comments on that. So I've just uploaded or grabbed the weekly data back to 1997 here from the historical point of view. So we have about 25 years of weekly data with good for cycle analysis. And this is what we revealed last week. There are one key cycle in this weekly series, so it stands out here in the spectrum down below with a length of 186 weeks. By the way, this is a 3.4 years cycle, so might be interesting if you research on the 3.4 years cycle. We have this longer term cycle here, and we pick the shorter term cycle here. So these three cycles stand out in the spectrum. That was the reason I selected these three cycles here, and now the composite is on the chart as we did it last week. And I explained that these have a high correlation score, as you can see here on top of the correlation number. So the numbers look good, and I showed you last week how to do it with a cycle scanner. But there's a different way to visualize this data set. And this is a way how I often continue after I've done this with the cycle analyzer, which gives you the basic results on this data set, then how to continue. And therefore I decided just today, I want to share with you one way how I continue working with these long time series data sets. So therefore I will switch now to a different perspective. You can start with this perspective by activating here down below. There is a switch button where you can switch between the composite cycle overlay or just plot this composite as an indicator on the bottom of the chart, right? So if you switch it on or off, you can use it as an overlay to the chart, or if you deactivate the overlay, it will simply show up as an indicator plot at the bottom. Now you might think, oh, why should we use this as an indicator plot? The overlay would, from a visual perspective, tell me something more on this anyhow. So that's the point now I want to make. And maybe you want to add other analysis on this chart here, and maybe you don't want the composite as an overlay on the full chart. So therefore, take it as an indicator, but that's not the point I want to make. What I show you now is how I then continue in visualizing these data sets. So therefore, I will switch now to a different chart based on that. So give me a second, and that's shown now here. I have so it's I grabbed more or less the screenshot from the cycle scanner, which you have seen just a second ago. And last week, I explained how to develop this analysis. So this is just a screenshot now taken on a blank sheet, a virtual sheet on your computer. And now I have added, or I've highlighted the areas where the composite cycle is moving up. Yeah, and I have highlighted this with the green faces on this chart. And when the composite cycle is pointing down, yeah, I have put the red background on the chart. So therefore, you just see the timing of the composite indicator. And that's often a story I try to explain, that it's not about the amplitude swings of the composite. It's about the timing indication we give by the turns of the composite. So when the composite turns from top to bottom, regardless of the size of the amplitude. So the size of the amplitude might be indicated by the amplitude of the dominant cycle, which is behind this composite cycle. But more important are the turning points in regards to time. And by doing this kind of visualization, yeah, you get a better feeling. So if the points in time gave you a good clue about what happens in the raw data or not. So it's just another different visual form of looking at this composite plot here. Yeah? And let's make it even a tick larger here in this case so that we can see it here, and now you'll see my cursor here, right? So it's a simple way, and it's just manually added after the composite was done. And you can now see that during situations or times when the composite was moving up, I have highlighted this with the green background. I've just added this cursor here, or this arrow to indicate an up move. Here's the down move of the market, up move. And then that's another important point to make here. Here we had this downward phase of the composite cycle, but the main market, if you have here the clue here is more or less a sideways move. So it stopped the strong uptrend and then resulted in this, I would say, 2 years of sideways movement in the main markets, so which is also then in alignment with the downward market here. Then we have the next upswing here, which an upswing in the market, then the downswing of the composite here, downswing of the main markets, then the next upswing phase of the composite. And here we have another downswing, which is then in the main markets, this sideways move, then another long-term uptrend here, then the long-term sideways phase here, where we had the down moving composite cycle here. But this resulted in a 2 years period where we just had the sideways moving S&P 500. Then the next strong uptrend started here exactly at this low of the composite. Then resulting here in the next downswing of this composite here, which was then the sideways phase, then the next strong uptrend. And now, and this is what I explained also last week, so it's not a new finding, it's just a different way of visualizing that. That's where we are today. So the weekly composite, so the long-term perspective on the S&P changed its phase during the last week. So I explained it last week, but again, it's just a repetition because I think it's an important point in time. If such a strong composite, and we have a high correlation for the last 25 years, I'm just picking 2 or 3 main cycles. So that's an interesting picture because on daily cycles, we don't find these clear messages here in this case. So the weekly cycle speaks a clear message, and we need to take into account here in the upper corner that we have changed phase right now. So during the last phases, when green switched to red, just in this kind of visualization here, the market moved sideways. Yeah. So at least we maybe could expect now or during the next week the uptrend to stop, entering a longer period of sideways. But this then relates to external impacts. If we get into a downtrend, I think this cannot be predicted by cycles alone. We always need external triggers, which can, but now we have a period. If we see external triggers, we have a higher risk that the markets could go down sharply because we are in a period, long-term cycles pointing down. Okay, so it's not a new message if you have watched the session last time, but I would encourage you, try to do similar visualizations once you have built a composite on your chart, and then continue if you have periods, and then drill down in the next smaller time frame. So as these weekly cycles, they don't change every week. So you don't need to update this kind of picture every week or every day. So this gives you a guidance where you are in the broader picture of the market, and then drill down more or less to your time frame you are more or less interested for your trading activity. So, and if this is the case here, so maybe you should make close stops on any long trade you're already in, and maybe you can enter now if you are going short in different markets, so you can look out on shorter time frame for shorting opportunities in the markets. Don't trade cycles, trade price. And this is not trade recommendation, this is cycle analysis. I'm sure you know about this. But maybe this opens the way for also thinking in a different way on how to visualize these cycles instead of just plotting the composite. That's the purpose for today. So maybe you find this kind of visualization interesting, and then you can do this on your own chart. So section 1. This was just the way how to visualize different phases of composite cycles. Section 2 is for today. Let's review your poll answers. So much thanks for providing some answers on the poll. And therefore, let's switch now back to the poll we did. So I wanted to understand how we can improve this weekly Cycles TV. We are now live for almost a year. As said, it's a non-scripted live session here, or in most cases it was a live session. So I wanted to understand if live is so important for you, and how I can improve to give you better feeling, better knowledge on cycles. As you know, we are non-profit and we try to share our experience, our knowledge, to spread the knowledge on cycle analysis. So let's get into the answers. Your answers, by the way, not my answers. The first question. How do you rate the current weekly cycles TV session? Yeah, what should I say? Maybe it's the reason because you watched the session. The people who don't have not watched the session, so it's an easy answer. But anyhow, I think in general I'm fine with that, and thanks for your nice feedback. So I think we get the right sense on how to bring this across. So this is a kind of feeling, so we don't need to change it in general. So let's fine tune then the little bits and bytes of how we present this. So what's the preferred duration for Cycles TV episode? This was the second question. And most of you, nearly a half of the colleagues who didn't answer is about 30 minutes. I think that's the format I always try to achieve. Sometimes a little bit longer, sometimes a little bit shorter, but I will keep it that we don't go over 30 minutes in general as a key rule of thumb, as this seems to be the most interested length of this session here. Third question, please prioritize which topics are the most important and which are less important. So what you told me is current market cycle analysis. I think similar to what I did anyhow, mainly. Compared or added with education on cycle analysis methods. And then third, showcasing how to use the cycle map. What's a little bit surprising that bringing on guests is not your key priority for this session is I was thinking maybe I need to add more guests to the show so that you get a different views, different opinion, different ways how to do cycle analysis, because there's not only one method. But just reading these answers here, I think we stick to the current market analysis, or I will pick one or two main markets and just continue with the analysis. Maybe I will bring in then more content on the education area. So I will mix the market analysis with some salt on education, which I try anyhow, by the way. But okay, let's try to continue doing that. Next question. Do you prefer live over pre-recorded videos? And most of you are fine with recorded videos. However, there's a huge amount of you which like the live sessions. So therefore, I will keep a balance of always trying to do it live. But if you're anyhow, there's a large community which will not be able to join the live period, because I know it's a timing topic as you are all over the world. Please allow me from time to time also to throw in some pre-recorded sessions, which allows me more flexibility in preparing all the content for you here. And I will find a way to announce when it's live and when it's recorded in advance. So because the live sessions are very important, because I want to interact with you. And also for me, live is very important, that we get the option to have live questions and live reactions to what I showcase here. Because I mean, I'm sitting here in my studio was just looking into a camera, and it would be more nice to have live feedback. So I will not record everything, but as I started already, I will throw in some recorded session, and I will work on a way how to inform you upfront if it's live or not. Moving on. Okay, which asset classes are most important for you to get covered? So most of you want to know about the global stock market indices, commodities, which I have not covered so much in the last session. So I will bring in more on commodities then next time. Cryptocurrencies, which we do anyhow regularly, and sentiment Forex. That's a little bit surprised that at least Forex is not interested here in this community, and sentiment. So takeaway for me is I will bring in more commodities to do some cycle analysis, right? Okay, the time frames you would like to get covered during the session here is the daily time frame, which I like most to bring in here across, because intraday is very short-lived. So we need to do it daily if we go to intraday, but that's what we can't promise here. So I will keep the focus on the daily as did, and then from time to time bring in the weekly, so the longer-term picture here, and we will not focus on intraday. Maybe just as an excursus how to work with intraday data, but not as a regular topic on the show here. Yeah, the other topics I would like to maybe go into the depth of the individual topics one by one. So I think we should not review all comments here, as there are also some personal comments in the topics. But I understand that there's a question about how to bring in third-party sources. So again, I see the commodities topics. I also see the money flow cycles on volume. Traded volume is also interesting, which I've not covered here. But if we deal with markets, we don't need only to analyze the price. We can also analyze cycles in traded volume. I mean, you can also chart or adjust your charts that you have charts based on traded volume and not by time. So volume-based charts are also interesting for cycle analysis, because then you find cycles in traded volume. Yeah, normally we try to find cycles in regards to time. Especially in futures contracts and other classes, we can chart them by volume and find volume cycles. So that's right. Thanks for the comment here. I mean, it's maybe not the easiest one for everyone, but it's an interesting area which we did a lot of research in. So I will take this as an idea, a volume. And there is also I think here down below, there was the rate of change It's a kind of detrending. Yeah, if we use the rate of change for cycle analysis, it's more or less similar to what is anyhow happening in the background of the engine. It's the detrending. So the rate of change is more very simple detrending algorithm. But maybe that's some topic for education, how you can detrend data, and the rate of change is more or less one way to detrend data also. So scanning topics, that's also an option mentioned here. So I think this is a little bit the future of the application. So, we are working on improving the application for bringing in new features, and scanning and automatically scanning for cycles in these data set is for sure something that will show up in the application while we go. I cannot make a promise on when this will be available, but you can be sure that this is on the to-do list to improve the features of the application. I know that maybe you need more explanation on the definitions, and the documentation maybe might not be there. So if you use the application, I know that a lot of knowledge is required upfront, and I will take this feedback. We have a documentation page. It's not updated regularly. We'll work on that. Okay, so just reviewing some key comments. I will take each individual one into account. I just want to not read every individual comment here. And then finally, I think this is just the word cloud based on your feedback in one word. To be honest, I like your feedback very much. So this keeps me I'm running this show here. If you get value out of it, I'm happy. Yeah, so that's the purpose why I'm here. If you would not see any value, I think I would not be here. So, but this keeps me running the show every week moving forward. So therefore, thanks for your feedback for this session. This is very important for me, so you can be sure I will take this into account. I think in general, we are right on track. Commodities, the duration, also volume cycles, some features for scanning cycles, so will all be taken into account. Therefore, thanks for taking the time. Hope you got a nice idea today how to visualize composite cycles, at least draw a longer-term picture on the wall so that you're prepared in which phase you are. And we will see again next week, same time, same place, to discuss some cycles. Thanks for joining today. Have a nice week. Bye.